with your host, Darrell Martin.
And I got Lou from Fairfield, Connecticut. Man, how you doing, Lou?
I'm doing good, Darrell. And I got to tell you, you're not just blowing hot air out there. I think the way you look at the market is terrific. You're a nice guy as far as over the TV. All the research you do, all the homework you do, I truly appreciate it. I appreciate your view of the market. It's awesome.
I appreciate that. Thank you very much.
Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Darrell Martin.
Hi, folks. Basil Chapman sitting in for Darrell Martin, and my pleasure to be here. Usually I have my 11 o'clock till noon show called the Tiger Technicians Hour. My daily service is called the Tiger Technicians Hour. Oops. Tiger Technicians Hour is the hour show, call-in show. My daily service is called the opening call. Just trying to do too many things at once here. And, of course, pleasure to be here for the Diagnostics Trading Hour. I know Darrell likes to look at the 10-minute charts, so let's look at some of these 10-minute charts. We're looking right now at the VIX index. One on the right, if you're looking at Tiger TV, has the volatility index, the CBOE volatility index, measuring, I call it measuring the buying intensity and selling intensity, making the fourth highest peak. What does that mean? It means you look for the most identifiable lowest low bar. And this morning, we had closed on Friday at 17.49, and the low of this 10-minute bar was $17.30. Let's just type that in, 17.30. And then you merely count each successively higher peak, peak A, B, C, D. D is where you want to go to in the Chapman wave methodology. That's where you want to make some decisions about taking some profits, or whether or not the left side trough of importance will be taken out, so that the whole position is, you've taken all your money off the position. But most importantly, the idea is to take you from this low bar, and either by chart pattern or using the technicals on the left, I've got the stuff I call the technicals, to get you to a C or a D. It can go higher. Other things can happen, and that's what's very important. Now, most importantly about this is if you put the technicals, my technicals, this is the yellow golden line here is the 200-period exponential moving average. This is called the MACD, the moving average convergence divergence. This is called the slow stochastic. And you'll see that on this high, right, where did it go? Right there. On that high, peak D, there was a very different configuration in the technicals to at this high right here. So the high of 1130 on the VIX index, the volatility index in the 10-minute chart, had a pattern that I call the squash, where the stochastic and the MACD get very close together. It gives you enough power to take you to at least a C or maybe even a D, and then it pulls back sharply. Then the momentum of the MACD takes you to a D or an E, and the stochastic starts to fail, and that's exactly what's going on right here. So as it stands at this particular point, it's going to be very important to see whether or not the VIX index goes above 2129, that's the day's high on the 10-minute bar. Because if it does, it could be recycling, and it means that we haven't seen the low of the day yet. But, and this is going to be really important because time-wise, at 10 minutes past 1 Eastern time, this hour is really important on a market day like this, where it's one of the worst days in quite a few months in terms of the losses that we're looking at. And at the same time, the chart pattern, the configuration is quite simple. It's like this. It looks like an arch formation. Let me just do that. And there should be a right side coming in right there. So it makes this base that we're looking at very, very important right there. And it says that if at any point, let me just draw that in green so you can see what I'm looking at, because it makes it very clear this way. New parallel, make this one pink or some reddish. There. And that says that if there's going to be a failure in the VIX index, meaning if the selling pressure is being relieved, and that the buying pressure should come in for at least a little while, then what we'd be looking at is a slide that takes the VIX index at 20.74 up to 95, up 16.58%, below the support right there of 20.30, and then it would test the low of 20.04 that was made at 10:30 this morning, and I usually go to the bar that is the barrier bar right there. So this is going to be very, very important. Why? Because there is what I call a left side, right side price timeline, which says we haven't got very much to go, maybe 20, 30 minutes, and that if there's a break, the break will occur by the VIX sliding below 20.53, 20.50 in the next 10 minutes or so to start a move in the market that comes off the bottom. Now, the MACD is not showing any strength, and the stochastic is in the 10-minute chart is not showing any strength. So where's the next bounce going to come from? It has to be price movement because it's not coming yet from the technicals in this second phase. And it's suggesting that at some point quite soon, there might be a little pop in the technicals with the Dow down 322 on this. What is this? This is the 5th day of January. And the S&P is down 36. These are big numbers. It just doesn't happen very often. So the selling pressure is quite intense. And at the same time, let me just do this. ESH15. There is an opportunity here for the inverse to happen, but not if it takes out the low of 2012.75 that was made at 1 o'clock in the E-mini. And it's trying, there's a doji candle. The stochastic has a positive divergence between the price pulling back and the MACD a little bit better than it was, and the stochastic much better than it was. So if ever there was an opportunity right within this 10, 15-minute segment that we're doing here for the market to turn around, this is going to be it, and it's going to be tough to do because the selling pressure is very, very heavy. And one of the things that I'm looking at here that tells me about it is if I go to the TLT, the TLT 10-minute chart made a double top at 129.32. This is the Lehman 20-year T-bond fund. And this pattern right here shows you, this is what I call the naked chart. You could do this without any of the technicals, all just waiting for a peak D to occur. So this is A, this is B, this is C, and that's D. And D turns out to be the high of the 10-minute bar. This is the methodology that I developed many decades ago. All right. So that says that in this particular pattern, we're looking more at a rectangle type consolidation right there between 128.64 on the 10-minute chart, and I'd go to about, yeah, you could go to that high, 129.28. 129.32 was the high of the day. So how are we going to piece this together to suggest what would be the next trade of importance? Well, let's do this. Let's look at the, let's just go back to the E-mini for a moment. And you can see we've just taken out the left side low bar. And in the VIX index, did we take out the high bar? No. So in a sense, that's a positive divergence, but believe me, down 332 points. First of all, I never expected that today. I've been anticipating that the 17,600s would hold the support. That was a worst-case basis, and that we would start to have an inside buy as by the end of the day, the market had turned around, and very reluctantly we go up over the next week or two. This is really very ugly behavior, very ugly patterns that are being produced right now. And So the VIX index is now starting to attempt, at least, to make the inverse. It's instead of the lowercase m pattern, this is a lowercase w pattern, and it's saying, hey, I'm going to try to get back to the high because the S&P just went to a new low, and that should be the counterpoint move. Okay, now let's look at something that's acting very well at this particular point. Let's look at GCG 15. That's the gold contract. And you will see that we've gone, remember, the idea of the Chapman wave methodology is to go from the lowest, most identifiable and obvious low bar. In this case, it's this particular bar right here. Hello? Right there. And the bar that makes the low cannot be the high, except when you get to leg D and then a peak D. So this wouldn't be able to count for a leg A. That has to be a leg A. And what are we expecting? We're expecting A, B, C, D. Now this is an A. That's a B. That's a C right there. And this is a D. Lo and behold, goes to a D, and that's where you can. You don't have to, but that's where you can. That often do get the sharpest decline. So now we're going to assess this and say, hey, wait a minute. Gold's had a very nice rally. Is this just a counterpoint rally? This is a rally, even though you've got the dollar doing so well. Look at the dollar, DXY. So the dollar has gone. Let's count the dollar and see if it's also gone 4 legs to the upside. A right here. B right here. C right here. Oh, and there's your D. You know, I've done this maybe what? 500,000 times over all the years. I don't know how many times. And I'm always, I can't believe that these things happen. Look, it goes from a low of, this is the dollar index, it goes from a low of 91.26 at 4:45 on the 5th this morning. And then it goes peak A, B, C, D. Remember, D's fourth highest peak is what you want to see. And then lo and behold, you get 91.78 is D at 7:45 this morning, and it comes down and goes all the way back to 91.39. Now it's going A to B. Now the patterns that we always identify, we try to identify, are the patterns that look like that pattern I call the lowercase h that turns into an M. And there's the H, could be turning into an M right there. So that's going to help gold. I'll be right back. Basil Chapman doing some technical studies based on the Chapman wave methodology and sitting in for Darrell Martin. Be right back. Dow's down 330.
Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Check out the new look of Tiger TV. Now you can see all hosts, charts, and computer screens live in high definition. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Thinkorswim, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV. Now, crystal clear in high definition, 24 hours a day, 7 days a week. If you haven't seen the new look of Tiger TV, then visit TFNN.com. Darrell takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks, so we're back, and I just wanted to show you something here. So the gold is trying to double top in the 10-minute chart at a peak D. The VIX index, remember, we're looking for those 4 higher peaks. Let me just show you something. Whoops. The VIX index right there. And VIX.X, there it is. So this is the moment right here at 1:25 p.m. Eastern Time. This is exactly that moment where you would anticipate within the next hour some kind of attempt to rally, and if that fails, most importantly, what we'd be looking at is a test of the double bottom test, a whole bunch of things. But this is, as I said before, this is that moment that says, hey, you've retested 2-3 times. Let me just go to the E-mini ESH. You just broke to a lower low. Everything now is going very, very negative, except that the technicals are showing a little bit of a divergence. Let me put that up there. A little bit of a positive divergence. You won't see it on the what I call the naked chart there, but you will see it there. You see the MACD and stochastics are right here. There's the first opportunity to have a bounce, and all that would say is to go from 2013, maybe up 7 points to the 216, 220 area. So first 3 points to the 216, then to the 219, 220 area. That's where there should be resistance if there's going to be a bounce at all. A very important moment. Now, so let's go back to our charts that we were looking at. What is the pattern that I mentioned before? It's the H pattern. We used to call it the dreaded H, still call it a dreaded H, but really it's the lowercase h pattern where the left side gets tested right there. And what do you see after that? You see the left side get taken out. And what happens is it gets taken out and it pierces and closes below it and starts another scallop or an arch formation. And it can do that for a while until it eventually tries either to make a V-shaped recovery or this pattern that I call the lowercase M pattern. So here we are. We're looking at the S&P right now. It's made already one, and yet there's a failed arch. There's another arch. And now it's going into that area that says, at least try for a larger arch to an M formation so that you can have an attempt later on to bounce and get into the 2017-2020 area. Okay. Now, with that said, I also had a question in the den about the EEM, or at least a statement in the den saying that the EEM, which is right there, the EEM is the iShares Emerging Market ETF. Look, there's that H pattern. Here's an H pattern that's failed right there, an H pattern that's failed before. This is the second H formation. And here's the same pattern that said, now, I always talk about trend lines as being very important. It just gives you a kind of a, not even a benchmark sometimes in this case it would be a benchmark because there was a time and a price that said between that peak D in the monthly chart of EEM back in 2007, plunging to below the 200 period exponential moving average, rallying again, and it says that distance there could equal to that distance there, but you've got to break out now. When you're looking at very long-term, this is a yearly chart. So when you're looking at long-term trend lines, I'm never impressed when the line just breaks through because it says, hey, I'm going to come back and retest. I'm very impressed if it doesn't even come back and retest like this. It doesn't come back and retest. Like this trend line right here, I took it away because it became useless at a certain point. This one that started over there went all the way across right there. Once we broke out decisively, just get rid of the line. But if you were looking at a trend line, for instance, here, let's just take it from there to there. And if you're looking and you took it as conservatively as possible, and you took it from that high in the dollar index of March of 2009 to inside the wick of that candle, you had to change it afterwards. You could at that first when it happens, I usually take it. I look at the top, but I take it from the body of the candle because look, there are more points of likelihood of being resistance if you go to that high and that body of the candle and bring the candle down than to be too optimistic. I'd rather be conservative. And now what you say is, oh, great, look, we've broken out of that trend line. Isn't that great? Except it didn't close. And even when it did close, it had to come back and do the retesting. So those long-term trend lines are really just guidelines. That I don't take them that seriously. I do when they succeed. But up until then, I just say, okay, we're testing. I'll be right back. Basil Chapman, Dow's down 317, S&P's down 37.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
How would you feel if you had a powerful decision-making tool that has the ability to find high-probability trading opportunities across multiple time frames in equities, currencies, and futures? Search no more. Take advantage of the best trade with the TAS Profile Scanner. Trade with confidence and clarity while using the software that thousands of institutional traders rely on to help them make the best and most accurate decisions. Scan over 1,000 equities, currencies, and futures instruments for high-probability trading setups utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time, for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. Subscribers will also gain access to the December 9th workshop with John Logan. There's no obligation to pay anything. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
So I'm drawing in a couple of things here. I just wanted to show you the potential. If there was going to be a rally, you would have to see the VIX index. We spoke about that before. You'd have to see the VIX index drop quite considerably. I'll tell you the numbers in a minute. And you would need to see, all right, so we're going to move this to the right a little bit. I just want to show you a couple of techniques here. 19, go right there. So what I'm looking at, oh, that is way too high, but it doesn't matter. I'm just going to put it in here to show the potential if we're going to get any turnaround whatsoever. I would not do it to there first. I'd do it somewhere over here to the 2020 level. However, I've just drawn it in because it's a pattern that is a possibility. So here we go. The E-mini has got a rising, a 10-minute chart has got a rising stochastic and a rising MACD. If it's going to fail, that'll be pretty negative and to say, hey, if you're going to fail, you're probably going to take out the low of today of 2011.50. But if you're going to continue higher, you're going to have to break above the 9-period moving average, that maroon colored right there. And you're going to really have to try to move above the doji of at 12.50, the 10-minute doji candle, small little plus sign looking candle at 2018.75. You should be able to do that after all the selling today. Should be at least a decent bounce at some point. That's number one. Number two is the VIX index. You remember what I spoke about right there, that the technicals were saying that the rally to that peak D were way stronger than the technicals at E. Now you're starting to see the failure pattern. And that failure pattern, whoops, am I having a problem with the Skype? All right, that's my own picture, but that's not the charts. Yeah, during the break we'll connect. Okay, so what we're looking at is that peak E, I have to put it down, arrow Y, because it's all breaking down at that particular point. Says that there should be a slide, and if in my rule of thumb, that cup formation, in my CD introducing the Chapman methodology in this CD here, there's a pattern that I call the cup formation. And that cup formation, that's a slide, this was a chapter, cup formation, chapter 15. Yep, right there it is, cup symmetry. So in that particular pattern, what we're looking at, it's not the one that I wanted. I'm looking at the inverse of the M formation. Doesn't matter. I'll explain what I'm looking at. In this particular instance, I've got it in the CD, but I just can't find it right now. When you're getting close to the double top, it's like the pattern that I talk about in the H pattern that goes like this, and it makes the little cup formation right there, and then it gets a test, and it could go lower, it could hold it, a whole bunch of things that happen. If it breaks the left side low and closes below it, that means one thing. If it goes there and then bounces back, it says another. If it doesn't even break that left side low, it says great, it can rally above the arch high. But in this case, the lowercase h becomes an M. I hope you can see. Let me just check here what's going on. So let me try it over here. I think we've got it. Yeah. So in this particular case, there's that lowercase m pattern. Well, this is the exact same thing, except it's upside down. You've got the arm going that way, and now you've got the cup. Instead of an arch, you've got the cup, and you've got the second cup, and it's breaking down because it broke above the left side high, but it closed under it. It says, okay, under those conditions, you could rally, but you probably won't rally below that little plus sign low of 20.47, except for one thing. If the technicals are failing, and at that level there, you got a sell signal that went to a sell mode. Now, this time on the 10-minute chart, this is a sell signal that has gone to a sell mode. It says there's a good chance you could not only go down below 2030, but you could, in fact, double down, which means you could go all the way to 1970 to 1951. That's ideal conditions. We don't know yet. We're just doing one thing at a time. And I've still got the left side, right side price time match, which says that at least 20.30 it would be the target in the next 2 10-minute bars, but it's really a left side, right side price time match. We'll be looking at that, and we'll go through it during the session. Now, let's do something else. In the, that's the VIX index. In the TLT, which to a certain extent can give you clues because it's just almost been in its independent orbit at this particular point. What's happened is it's stalled on the right side. And this is in the Chapman wave methodology, in the CD introducing the Chapman wave methodology. This is the pattern that I call the right shoulder failure pattern. This is chapter 21, slide 362. So let's go chapter 21 and see if it's going to work out. We'll know. Right there, the right shoulder pattern, and now we go, look, there it is. The right shoulder pattern, that's over there. You see where it went to an A and then it became an A minus because it failed? Well, this is what we're going to look at right now. Does this become A, B, C and a C minus because it fails? This is a very important period right at this moment because we've got a bunch of pressure points pushing the market lower. And now there should be some kind of a relief, and certainly based on the VIX index. Where is it trading right now? The VIX index is, if I can find it, right there. Dollar VIX.X. Yeah, there it is. That's the next bar that's coming in right there. So we're going to be watching this closely. So you need speed. In a bull market and a bear market, you need speed. In a bull phase or a bear phase, it doesn't matter whether it's a 10-minute chart, a 1-minute chart, or a monthly chart. Speed is your friend in either direction. In this case, you want speed to the downside. You want to see the VIX drop from 20.61 to 20.37. And that'll say, hey, I've broken all those support levels. That's a good sign because now the market can go higher. It could even get to Dow minus 180. The S&P could be down minus 20, something like that. Still a lot to go because we're down minus 3 or 5 in the Dow. Now, this is going to be very important. So we're looking, because I'm doing this as a 10-minute chart to show many of the techniques. And as I say, the naked chart is one that you could use if you know how to use the Chapman wave methodology. Look at this. There's the low bar, and it's going A, B, C, D, pulls back and makes the cup formation. In the Chapman wave formation, there's a thing I call the double top or drop bucket formation. And that's one that comes in right here, chapter 22. And what it says is basically that when you get to a top, it's like an inverted H, right? This is where, you remember I showed you the vertical where the technicals were strong there but weak here? That says this particular pattern, if you break a third from the lip high to the trough bottom of the cup, there's a real good chance that if you break a third to a half and then close under the half, not only will you keep dropping, but you will test the low of the cup. If you close under the low of the cup, and the technicals are still weak, you could have a 1-to-1 to the downside. Hey, that'll be the first real sign of strength. So far, yep, it looks like the pattern's working out, but you know what? It's intra-bar. I can't talk about this bar as if it's concluded. It isn't. It's still got what? Oh, I got a little mechanism to show how many minutes left. I don't have it on this. But there's still many minutes left on this 10-minute bar. It should go to at least another 5. So let's just put this aside and say, technically, what are we looking at? Well, what we're looking at is on the E-mini that we are still not above the candle high of 201750 that was made in the last bar. This is so important because if you fail here, all you're going to do is you're going to make another little H, a little mini H pattern. It's important to make V-shaped patterns and hold and take out a left side high. You see, this V-shaped pattern failed to take out that high right there of 2027.25. This one hasn't even taken out that high right there of 2018.75. So this is a very important moment here. So wanted to get that out the way. Then I also wanted to talk about a couple of other things. Let me just see here if there are any messages here. Any questions? So they're showing on CNBC record margin debt as a percentage of GDP. I show my subscribers, it was sent to me before. It is a significant chart. It is absolutely significant. I'm not sure it's concluded, but it's up in the area that is scary. I have to tell you, it is record. If you're looking at CNBC, I can't hear the words. I can see the chart, and he circled it, and it's gone to A, B. There's still a little more to go, I believe, and it could take a little time to get there. So we are in I think 2015 is going to be one of the most historic years for many reasons, and we'll see how it pans out over the next. Now, while I'm talking about historic, let me just say, here we are. I need to show you this. Within the context of where we are in the Dow, the only reason why I kept saying that I believe instead of that double M, lowercase m pattern, I call it the double camel hump, where the price in the weekly chart goes up, you'll see it better in the S&P, goes up in an alternate count to, in this case, E/A or F/B, that if there's a failure in the technicals from this level and in the price, and the price takes out key support, it becomes really significant because it starts to match the 2008 weekly chart in October of 2008. I just don't see that yet. There are a lot of dissimilarities, more than the similarities. The daily chart, no question, this is ugly. But the weekly chart is still, look how powerful this up channel is at this point. Days just, what, we're 3 hours or something, 3.5 hours into the trading, first day of the trading week. I'm looking at a weekly chart, but I need to show you what would happen if certain things take place. And one is, if on Friday, I don't care what the reason is, but if a Friday at 4 o'clock, we are looking at the S&P closing anywhere in this area here or lower, 2010 or lower, I have to conclude that this is going to be a far more serious decline. Now, I was expecting exactly the same thing that started to happen over the last few days. Later, because I anticipated that we would hold 2042-ish on the weekly chart of the S&P, and then we'd have a nominal high into this, what I call the up channel inside track. So we wouldn't go much higher for the next move than just slightly above 2092.70, the high of last week. So I'll be back, and we'll get back to looking at the charts straight after this.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman wave sequence. Using the Chapman wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Oh, I'm on. Good. Didn't even hear that. Good grief. Oh, one of those days, I guess. I was so busy involved in the charts. Okay, let's just go back to what we're looking at here. I wanted to show something that, for those of you who haven't seen it before, there's been a 43-month match in the Dow. Let me just do this. Open this up here. That silence was... because I was out to lunch, as they say. In the Dow, INDU, look at this, 43 months. It goes 43 months from the peak of October 2007. I don't know why I keep saying 2008. It's 2007, October 2007, odd number. 14,198 was the high in the Dow. Pulls back to 64.69. I shouldn't say pulls back. It crashes down to 51%, 64.69 in March of 2009. Then it rallies to peak A, B, C. Do you remember we discussed those Ds, how important they are? And it goes to 12,876, May of 2011. That took 43 months. And then from that peak, there's the sharpest decline, and it goes from 12,876 down to 10,404. That is, in fact, at $2,400. That's a pretty deep, at 20% or more, 22% correction. And then, lo and behold, from October of 2011, there is a rally that takes you to peak A, B, C, D, and look at that inside track. Let me make this nice and big. I showed this to my subscribers for the last couple of weeks, so we've been looking at it real closely. And in the 43rd month, I mean, 43 months. This is an 86-month time frame. You made an exact match in time, not in price, but it did walk the 9-period moving average, that black line, all this time. They made a doji, long-legged doji candle right there in December with a high of 18,103. We have not taken that out yet, and that is key. 43 months, 43 months. This is a very important period. My suspicion was we would go 44 months with slightly higher highs, going to the 18,400s, somewhere around there, not a big deal, but maybe 300 points more than we were. And then we get a 15 or more % smash to the downside. Has that begun now? because we have that failure in the weekly chart? I can't say. I wasn't expecting it. I thought somehow or other we would squeak out some kind of a turnaround today, and tomorrow would be an up session, a very nice up session, instead of an obsession. But we'll see what happens. That's where I'm looking. The reason why I'm looking at it is this weekly chart, even though it's a rising wedge formation and it's pulled back and it's testing. Look how it's testing that trend line right there on the inside track buy zone. Then we had a caller this morning that said he's just switched from the put position to the long position, the short position to the long position. We'll see if that's going to work in the Dow. But a move of 300 points, 330, 340 points under these conditions, I have to respect it. I have to say it's not what I was anticipating. And this little pattern of a little doji candle bottom right here, we've got a peak A, we've got a peak B even. Oh my goodness, look at this. So tiny, just barely an A and then a B. You want to see long legs. Leg A, pull back modestly, just 1 to 3 bars. Leg B, pull back no more than 1 or 2, 3 bars. And then whoosh, leg 3. That's the way you make a strong turnaround. And in the here we go. And in the naked chart, same thing. The E-mini. Look, it's not a bad start, but boy, it's not what you really want. Look how quickly you came down. You're going to go the same way back up. It's going to have speed. And if you're looking at the VIX index, it was acting well. If you were looking for a turnaround, that's acting well. But if not, look. It's holding, it's using up time rather than price. And the bar, this is the bar that was supposed to be the ugly candle, testing the low for left side, right side price time match, not working. So far, this is a positive for, just so far, for the VIX index. The bar is not completed. We'll see where it completes, and not a positive yet for the market. You have to be, it can't be down 307 in the Dow right at this point. For this VIX to start sliding very sharply, the Dow needs a good 35 to 40 point rally, just straight up. As if to say, I've trapped everybody, and now I'm going to have fun the other way. That's kind of the way it's got to work. All right? So we're about to close out. My service is the opening call. Check it out on the front page of TFNN. And please stay tuned. You've got Dave White coming back right now after vacation. Looking forward to hearing Dave. Should be a wonderful show. He's made some terrific calls. So congratulations, Dave. And I'll be back tomorrow with you all. Thanks for being here.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, oil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They've been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. You're watching Tiger TV.